This one simple trading rule saved me about $500,000 in the market. I'm gonna show you exactly what it is, how you can implement it into your own trading strategy. And if you stay with me to the end of the video, I'm gonna show you a step-by-step plan you can implement right now to start seeing consistent profits every single month. All right, let's get right into it. So when your confidence is low, you have to reduce your size every single time. That can mean a lot of things. That can mean uncertainty. If you don't know what the market's gonna do, if you're confused, that's totally fine. About half the time I'm watching the market, I'm not exactly sure what's going to happen. And when I'm not sure, I drop size or I don't do anything. I sit on my hands. That could be if you're feeling high emotions, low confidence, stress, FOMO. If you see your friend, if you see your classmate, your roommate, whatever, make profits in the market and you're upset, sad, angry, mad that you didn't take the same trade, you should size down immediately, right away, or honestly just walk away. Go for a walk until those thoughts of FOMO are just out of your head. Stress is a big one. Let's say, someone, one of your loved ones passed away. Let's say your girlfriend broke up with you. Whatever it is, if you have something else going on in your head, size down significantly. We both know that analysis, risk management won't make you profitable. It's when you learn to deal and handle your emotions is when the money actually starts coming in. So if you had a bad time in life, somebody died, your girlfriend broke up with you, you literally should stop trading. You should stop trading or reduce your size significantly, because one small little loss could set you on tilt and the whole cycle will start that we're about to kind of talk about right now. And honestly, stress and low confidence is a big one. Honestly, if you want to join my free trading community down below, trading can get kind of lonely, but if you kind of talk to people, talk through it, a lot of people going through the same exact shit you're going through right now can kind of help you. And it's an awesome community. It's free. I post my trade recaps every single day. I post my free charts every single day, so you know exactly where to place trades, and it's all free. And the best part is just talking to people who are doing and going through the same things you're going through. But high emotions is such a significant impact. I see people every single day on there saying they just got laid off from their job, or they're going through a bad time, about to have a baby, and they're still on the market trying to trade while their levels of stress, their emotions are super, super high. And it's just a huge recipe for disaster. And the truth is, right, 80% of success will come from handling emotions and risk. So no setups, no fancy indicators, nothing is gonna actually show you and give you consistent profits in the market. The biggest part is handling emotions and managing your risk. So the funny thing is, most traders will do the exact opposite. You kind of tell this little cycle I put up for y'all. This is the cycle that most traders fell onto. I fell in this cycle a long, long time ago, and it took me a long, long time just to break out. But you make a mistake. You have an emotional crash. You increase your size due to the crash, and then you lose more. And then it just repeats the same cycle over and over and over. And the mistake could be you get distracted, right? You miss your entry, so you decide to chase. You lose, hit your stop loss, so the next trade you go double your size to make back what you lost, and then some more for profits. And the increasing size is something that every single trader does almost every single day. They lose, they want to increase their size to make up what they lost, and then some more, so they feel like their time they're spending on the charts is actually worth something. And that is a cycle that traders who've been doing this for 1, 2, 3 years go over every single day. Now, in my mentorship group, my inner circle, the biggest thing we stress on is repeating these mistakes. There's certain signals, certain triggers that people have every single day that cause the emotional cycle. So if you're not tracking your trades, you're not journaling, you're not gonna know what you're doing wrong. You're not gonna know what those triggers are, and it's different for every single person. Like I have people in the group who, when they get distracted and miss a setup, right, they go on tilt, and every single time they go on tilt, those days where they blow weeks or months worth of progress in a single day is because they get distracted and miss a setup, or it's because they get wicked out and right before it goes to their take profit, or it's because they get 2 or 3 ticks away from take profit and then stops them out at break even or stops them out at a loss. And these triggers are super, super common. Every single time these things happen, it causes them to crash. And that's how we get better. We have to track everything we're doing wrong every single day, every single data point we can get. And once you identify these triggers, you're gonna be able to work around them. So I tell my students this all the time. We actually have something on our program called it's a Discord bot that basically every time they take a trade, everybody gets alerted. We all know. And we all have private profiles on our Discord, so we know exactly what they're supposed to be doing every single day. So if they're not doing what they want to do or what they're supposed to be doing, right, then we'll know and we'll call them out. And that's the biggest thing about trading, is being held accountable, because you're not being held accountable to nobody except yourself. So if you've been lying to yourself over and over and over again every single day, telling yourself tomorrow will be better, tomorrow I won't overtrade, tomorrow I won't oversize, why are you believing yourself if you've been lying to yourself for the past couple of years, past couple of months? It's just not gonna fix itself. It's not gonna work. So you have to track your data, understand why you're making the mistake, and when you do make the mistake, to cut this out, it's very, very simple. Next time you make a mistake, which you will do, I do every single day, instead of going on an emotional crash, or if you do go on an emotional crash, you lower your size, right? When you lower your size, your confidence will reset and then you raise your size again. Now, for me personally, every single time I have a red week, I will reduce my size to half until my confidence is back. Has nothing to do with probability, has nothing to do with math, has nothing to do with having good setups or a good market. It's literally just as simple as my confidence is low. I just had a red week. I lost money last week. I spent hours and hours and hours staring at the charts, staring at the market, and I lost money. So next week, I'll automatically size down to half every single time. And every single time I do this, I see significant results back in the market. And the big thing is when you're profitable, let's say you've been doing this for a couple of years, your P&L will be like an uptrend. You'll make higher highs and you'll make higher lows, but you will have those crashes. You'll have drawdowns. So if you size down every single time you're in drawdown, it minimizes your drawdown little and little and little every single time. So remember, you make a mistake the next time, which you do. I make mistakes all the time. You go through your emotional crash. Like let's say, for instance, last week I had back-to-back days where I got stopped out by literal ticks and the market decided to go in my exact direction, right? And I didn't crash, but if I did crash emotionally, I would tell myself, I would write it down, I'm not feeling good, the market just robbed me, whatever it is, I would size down. So I know because I've been working on myself, I've been doing this for a very, very long time, and you should know as well, when you're not feeling good, when you're sad, when you're depressed, or when you're just a little overexcited, or when you just have FOMO because you barely missed your setup, lower your size. Every single time you see a little emotional or a little emotion coming out of your head, something coming out of your brain, lower your size because those drawdowns are always going to be there. What will make you, and what will separate you from being profitable versus unprofitable is how you handle those drawdowns. Do you size down when you're in drawdown or do you double your size to try to get out? That's a big, big difference. But the confidence reset is key because once you lower your size, you keep losing, you're going to lose such a small amount of money, you won't care, right? And the market will get better. You'll get better entries. Your confidence will be back when you size back up again. Until that happens, you have to keep small size. For me personally, when I have a red week, I'll cut my size in half and it'll stay cut in half until my week goes green. It's honestly a simple rule I've been living by every single year and has worked for me awesomely so far. So these are the key situations I will beg you to cut size if it gets to this. So let's say you won your first trade. First thing you gotta do is protect 70 to 80% of your profits or walk away. So what I do, if I get a first trade, I win, it's an A+ setup, meaning I'm risking 20 contracts, 30 contracts, and I win that trade, I get full TP, I'm walking away right away. But if you get your first win, let's say it's not a big win, protect 70 to 80% of your profits or walk away, meaning let's say if I make $1,000, I'm keeping $800 and I'm risking $200 on my next trade if I take one, right? So my stop loss on the next trade has to be $200 or I'm walking away every single time. Another big one, if you have 3 losses in a row, this is a personal one for me, but it's been working out so far, so I highly recommend you implement it. If you have 3 losses in a row, lower your risk, right, and don't tilt. For me, after I lose 3 times in a row in a day, I immediately shut my computer off. I'm done for the day. But 3 losses in a row is big. There's not a single trader out here that can handle 3 losses in a row and not feel a certain type of way, not feel a little sad, a little angry. So if you aren't feeling angry and aren't feeling sad, lower your risk no matter what, because I promise you that 4th loss will have a much bigger impact than the first 3. But for me, again, repeating this, red week, cut my size in half. That's something that every single trader should follow. If you have a red week, your size should get cut in half right away until confidence is regained. Now, big news days like CPI, FOMC, Powell, even if Trump is talking that day, decrease your size, right? Because we don't know what's going to happen on big news days. We could chop. We can have an explosive move in either directions. Trump could say something crazy, right? Jerome Powell could die, and that will affect the market like crazy. So you don't know what's going to happen. Again, going back to the key things, especially when you're feeling uncertainty. Again, big news days, high emotions. We talked about that. Low confidence. So you don't know what the market's doing. Stress or FOMO. So if you big news day, we never know what's going to happen. You're decreasing size every single time. Now, I can't stress this one enough right here. If you get distracted and miss your entry, like from every single one of my mentorship students in the inner circle, this is the most common trigger because there's a common stereotype of every single trader I see coming into the group is a lot of them that training for a long time, they're super, super good at winning. They'll have weeks, months worth of great progress where they're making, $10, $20, $50,000 a month, but they have 1 or 2 days that blows everything. Everything is gone in 1 or 2 days because of this simple trigger. They get distracted, they miss their entry, so they chase. They already do something wrong, so they chase and they lose. And then what do they do right after? And this is such a common thing. If you think you're above this, you're not, because I was here. Every single one of the traders I mentor is here or was here. They have the emotional crash, which causes them to increase size, overtrade, revenge trade. They ignore all their rules because of one little thing. They get distracted and miss your entry. So you know what? Right here I have written down decrease your size. But if you have a big issue with this, and I tell a lot of my students to do this, if you distracted and miss your setup, walk away. The market will always be here tomorrow, always be here next week. It's not going anywhere. So if you are on tilt, and all of you that are watching this, like 90% of y'all, get distracted and miss your entry, I get pissed off when that happens too, you walk away. Don't even decrease size, just walk away. You get wicked out before it goes to TP, that sucks, we've all been there, happens to me all the time. Not all the time, but it happens to me a couple times a year, and that's a common thing, again, because I can't control the market. Right? Once I'm in. Anything could happen. I could get wicked out and go to TP. I don't care. I've had weeks where that happened to me literally like 3 or 4 times, and nothing changes, right? If that happens to you, it's another big common tilt, right? And I've have so much data from so many traders who haven't been profitable, who are profitable now, and who are almost profitable. And I'm telling you, these are simple triggers that all of them have. And once they remove these little triggers, they start making money consistently, right? Because again, they can win really well. They just can't handle their emotions. So if you get wicked out before it goes to TP, and you're like everybody else that has emotions, has a brain, instead of decreasing your size like I have on here, you just walk away, man. You walk away because you're putting yourself in a bad situation. And this is a story. I tell a lot of people this all the time. You all may have heard it before, but about 7 years ago, I had start of the year, January, I gave myself a full plan. I told myself that year, it's when I first got into tracking and journaling, kind of show you the importance of it. But when I first got into tracking and journaling, I told myself that year, I gave myself a plan. Super in-depth, easy to follow plan. And I told myself I'm only gonna follow this plan for the whole year. And obviously I didn't. I told myself I was. I lied to myself, I didn't. But I did track and journal every single thing, every single emotion I felt, every single data point, every single entry. And 9 months go by and I'm down like 50 grand. And I start to look at my data and I just tell myself, okay, let me just remove every single trade I took that wasn't part of my plan, every single trade I took that was, oversized, that I revenge traded, that just wasn't what I was supposed to do. And if I remove all those tilt trades, I remove all those revenge trades, I would have been up over 6 figures, right? But I lost 50K just because I did stupid shit. I didn't follow my plan. That was kind of my aha moment, knowing that, okay, if I followed exactly what I said I would do in January, 9 months down the line, I would have made 6 figures, but I didn't. That's a big thing, because if I get distracted and miss my entry, I'm done. If I get wicked out before it goes to TP, I'm done. If I'm tired, I see so many of y'all coming on, again, in the free Discord community, saying you just woke up, right? 9:30 a.m., you're up, you're in bed trading, you're still tired as fuck, you're groggy, and you expect the market to be nice, you expect to make money. These are the traders who have been unprofitable for a very, very long time because they don't take it seriously. So if you're tired, even if you woke up 2 hours before the market opened, let's say you didn't get a good night's sleep, right? Let's say you just had a newborn baby or you work extra hours. If you're tired, size down, because it's a huge psychological fact that if you're tired, your emotions will be heavily activated a lot faster. And if you take that first L, you have a much bigger chance of going on tilt. And the big thing I want you to get from this video is risk management. Technical analysis is not what's holding you back. It's the fact that you can't control your emotions. It's the fact that you have these things that happen in everyday life that happen to me, but what I choose to do is walk away. What you choose to do is trade, is to increase your size, is to try to make money now, even though you're at the very, very wrong condition. You're at a bad time, you're at a bad place, whatever it is, you decide to trade. All right, guys, and that's a wrap for today. Just to recap, again, it's controlling your emotions that are gonna make you profitable in the market, not any fancy signals or indicators. If you didn't know already, we're accepting new people into our mentorship program. We only take about 3 to 5 people a month. We just had some students graduate from our program. Most of you already know who they are. They've been absolutely killing it. We have some people actually coming in and kind of helping us teach you guys because they've been doing so well. But it's very small. 3 to 5 people can come in. If you're watching this video early, make sure you apply down below because there probably will still be some spots available. We're very selective. But if you apply below, we'll reach out to you right away if you think you are a good fit. Appreciate y'all watching this video. Please make sure to like and subscribe. It costs you nothing, but it honestly helps me keep going. I'll see you on the next one.